WPI numbers are out. Let's just focus on it. Let's just see what has come out as far as the WPI numbers are concerned. In terms of the poll, it was close to around 3%. So let's see what the numbers are. I think the numbers are 3.2 odd percent. So that's the number that we are talking about. The CPI number comes out today post market hours. So that'll be an interesting one as to what comes out, what happens over there. Okay, Maithili ma'am is now with us. Ma'am, April WPI number at 3.18% versus a poll of 2.8. It could be because of prices overshooting because of dollar.
Well, partly that, but partly also you must remember that the fuel and power segment would have shown a substantial increase, because oil prices, as we've seen, have recently crossed 75. They're close to 77 in between. So clearly the pressure is coming from fuel and power. Along with that, we've seen the rupee depreciating also vis-a-vis the dollar. So I think together the combination is going to see a reversal of the trend. Remember, the WPI had been declining for 5 consecutive months since November last year, and now we're seeing that reversal in trend. Quite possibly we'll see that reflected in the CPI also, the consumer price inflation, even though the fuel and power segment has a much lower weightage in the CPI as compared to the WPI. In the wholesale price index, the fuel and power index has a weightage of close to 14% as against just 9% in the CPI. But I do expect the reversal in trend that we've been seeing in the CPI as well as the WPI inflation numbers coming down. I do expect that to see a reversal. And even though the RBI does not take WPI formally into their calculations, clearly the days of declining interest rates are over. Industry must brace itself for higher interest rates.
Right. Ma'am, I just wanted to get a sense about, the crude prices. So now for the last 15-17 days, crude prices here in India, that's the retail crude prices, have not gone up because of the election and, the sort of mandate that they get before that. So there could be a steep price hike coming in if the prices still continue to be deregulated. So this number only has upside to its estimates?
Well, yes, it would appear so, because one doesn't know really quite whether, as we approach the general election dates, whether the government will get cold feet and go back to the era of subsidies. Remember, this government has been pretty strong in saying that no, we have deregulated oil prices. But as the election date approaches, and particularly if the BJP does not do very well in Karnataka, the exit polls show a hung legislature. But if the results are much worse than what the BJP was expecting, then you would expect the government to go in for more populist measures. And that would be quite damaging for the long-term prognosis for reform. But it might win the BJP some short-term political gains. So we'll have to wait and see, because clearly oil prices, particularly after the US has pulled out of the Iran nuclear deal, oil prices will be going up. We'll have to wait and see what does that mean. Oil prices going up, rupee depreciating. Together, that's not a very happy situation for India. So will the government chicken out? That's what we'll have to wait and watch.
These are some of the high-frequent macroeconomic indicators that certainly do give a direction of sorts to the government on what exactly is the step forward. But yeah, I have some internals as well with me. Firstly, there's a revision in the Feb WPI. It's been revised upwards to 2.74%. Primary articles inflation 1.4% versus just about a quarter of a percent in the previous quarter. And even for manufacturing products, it's gone up 3%. But yeah, Maithili, I have the food inflation number with me at 0.67%. versus a decline in the previous quarter. That's of course in March. What's your thoughts on this?
See, first of all, the primary food articles really do not have much of a weight in the wholesale price index. Secondly, even though they have gone up marginally, the fact is that as the summer months approach, typically food prices and food inflation does look up. But as far as the WPI is concerned, the larger worry really has always been fuel and power. Manufactured articles, so far, we did not see much increase in inflation and in prices because there was huge underutilization of capacity. But as the capacity gets utilized, as demand picks up, and we are seeing signs of demand picking up, we will see manufactured inflation go up, but not significantly, given that manufactured inflation has by and large been very muted. So for me, the bigger worry in the WPI has always been fuel and power, and that remains a constant source of worry, given that oil prices are going up, given that rupee has been depreciating. So these together will put pressure on the WPI.
All right. We also are joined by Radhika Rao now, the India economist with DBS. Radhika, it's a number that has come in more than expected. But yeah, we have fuel prices, which is of course a major concern. And add to that the depreciation in the rupee. What are your thoughts on the WPI number that has come in?
Hi, good afternoon. Yes, I think the headline is slightly firmer than consensus. As usual for the WPI, we look less at food, and in this environment, particularly more at what has been the impact of commodity prices. Overall in WPI as compared to the CPI, the weightage of crude and products is at about 10%, which includes the minerals, oils as well, which is usually associated products. If you take out the administered prices, which is usually LPG as well as kerosene, you're left at about 9 plus weightage, which is significant for commodity prices, and taxes which are running on top of it. So this is a crucial time. I think I also want to highlight here at the same time last year, actually the rupee was still on a weakening bias and oil prices were relatively high. So the full impact is still not very visible in the numbers. So I think in the next 6 months, I think the base effects will be more pronounced. And particularly in the next 3 months, when WPI as well as the CPI had actually softened a lot in the comparative period last year. So a lot of base effect coming in. For us, we look predominantly at fuel in the WPI as well as manufacturing inflation. On both these counts, there are indications that things are turning around. Good news for the manufacturing inflation, which means that the pricing power is actually coming back after a long week haul. But we have to take that with a pinch of salt, because as your pricing power comes back, output prices start going up. So are input prices in terms of at least commodities related sectors. I think it's positive to see capacity being utilized, like Maithili mentioned. But I think it's equally the pressure on margins which still remains because of higher input prices in the same line. So for inflation later tonight, where the CPI is expected, our forecast is at 4.5%, a pinch higher than consensus. But looking at the WPI, it does suggest some pipeline upside risk for the retail inflation as well.
Radhika, given the fact that in the WPI construct, it is a fuel and power segment which is the most volatile of all three segments, what are your expectations as far as oil prices are concerned? Do you expect that the kind of worries about oil prices post US pulling out of the Iran nuclear deal, do you expect them to be temporary? Do you expect oil prices to revert to the $60 to $70 range, or will we really see oil prices inch up further? What is your take on that? Because that has huge impact for India, not only for the WPI, CPI, but for the trade deficit, the fiscal deficit. Basically, it matters hugely for the Indian macroeconomy's happiness. Radhika?
Absolutely, Maithili. I think it is an important development, and unfortunately, apart from just supply and demand, there's also this geopolitical angle that has complicated the picture. Certainly, how US, if it reimposes sanctions on Iran because of pulling out of the non-nuclear treaty, I think it adds to the worries, because for India particularly, as has been spoken, recently, Iran was the third biggest supplier of crude oil. And overall trade with India had also improved since 2016, when the deal was signed. So it certainly doesn't bode well. I think on a more micro level, Saudi Arabia as well as Iraq, which are the other suppliers for India, have assured that that shortfall can be made up for. But in the very near term, if because refineries were looking at stepping up purchases from Iran, it looks like we'll have to go back to a phase where transactions with Iran used to be more barter, more on rupee payments, which it's difficult to access as compared to the normal banking channels. So coming back on a broader picture, yes, I think if this, as a house call, we do expect commodity prices to settle in the higher $70 to $75, and Iran to boot as well to the whole picture. And certainly, I think if FY18 was a challenging year, FY19 is likely to be the same, because now, like I mentioned earlier, as your base effect gets more unfavorable over the next 6 to 8 months, we will see the impact of a weaker rupee, as well as higher oil prices being much more pronounced in inflation, as well as the macro numbers. Growth for us, end of this month, we have a growth number coming in. I think that will be strong at 7% plus kind of levels. But thereafter, we will see a growth, I think, settle in the 7 and a 7.5% kind of range. So in the short term, I think a positive growth number will take something out of these macro weakness. But longer haul, I think if oil prices retain this appreciation bias, we would see the current account deficit closer to 2.5%. You would see inflation settle into the 4.5-5% for the CPI, and you would see a growth at the margin take a hit, because as output prices going up, input prices are going up as well.
And what is your sense? Do you see the government standing firm if oil prices were to continue? Will they continue with the deregulation, or will they revert once again to subsidies? Because remember, if you were to revert to subsidies, the impact via the fiscal deficit shows up only after a little while, whereas if you allow prices to be deregulated, it hits the price inflation numbers immediately. So will the government revert to that subterfuge, or will it stand firm and say, this is a step that we've taken and we're going to stand by it, and regardless of what happens to oil prices, we will allow prices domestically to go up? What is your sense? Remember, election is approaching. What is your sense, Radhika?
Absolutely, Maitri. I think both the factors that you highlighted go hand in hand to a great extent. Subsidies as a portion, as a percentage of GDP, used to be 0.5. Petroleum subsidies in particular used to be as big as 0.5, 0.6% of GDP. It has come down to 0.1% in the latest fiscal year, as well as the fiscal year we are in. It is a very difficult, a challenging situation to be in, and a true test of how deregulated market prices are really at this instance. Certainly, state elections are not going to make it easier. My personal view would be that I think there is likely to be a slight increase. Not much relief coming in from the excise duties until the government has better visibility on the GST aspect of the revenues, as well as privatization, which got off to a strong start. But with Air India, hitting its own hurdles, there are non-tax revenues, other non-tax revenue avenues which are still in a question mark. And we have seen GST improve a lot in the latest number, but part of it is seasonality. So we will have to see that sustain as well. So I don't think they will go into heavy excise duty cuts. But there was one in I think October, November last year. They could, and another one could be forthcoming over the next couple of weeks. But after that, I don't think we would have another round of cuts unless we have clear visibility on the other revenue sources. So as every 1 rupee cut in the excise duty costs us 0.08% of GDP potential losses. And this only adds to the fiscal burden, which overall, the market's already feeling the jitters. You can see that in the bond yields. You can see that in the rupee. So I don't think the government would risk taking a big hit on the revenues. So approaching state elections, probably cosmetic 1 or 2 rupee cut, but I don't think the entire structure will be dismantled because really this is the true test of the reforms which were undertaken in 2014 when most of these fuel types were deregulated.
Radhika, thanks so much for that. Maithili ma'am, as always, good to get your perspective on the macro data, WPI inflation coming in, but economists continue to be worried about what will be the impact of further crude oil prices hike as well as a lower base which comes up later.